Hello, everyone, and thank you for joining us again. In early February, Valerie and I came to you to discuss this year's election cycle as more people across the globe have gone to the polls or are going to the polls this year in 2024 than in the past several decades. That's led to a lot of headlines, especially in the past couple of weeks, and we thought after the elections in India, Mexico, and South Africa that it would be an opportune time to revisit some of the results and some of the implications with you today. So today I'm rejoined by Valerie Ho, Portfolio Manager and Country Analyst for India and Mexico. I'm also joined for the first time by Nick Engler, who is going to go through, is a Country Analyst for South Africa. And we're going to go through those three elections for you. So Val, let's start with you. Polling across the globe is just unreliable at best, and I think India is a prime example of that. We look at the amount of volatility that was introduced via the exit pollings being dramatically off from what the final result actually was. Can you actually walk us through what happened earlier this week from the polling into what the final results were in India?
Sure. So it was a big surprise when the final elections results were tallied. I'm actually going to go through the numbers because the numbers are quite staggering. I'm going to start with Prime Minister Modi's expectations pre-election. He had hoped that his NDA alliance, led by his BJP party, would achieve 400 seats out of the 543 seats in parliament. The election results had the NDA winning 293 seats only. Now that's over the 272 needed to achieve a simple majority, but well short of Modi's expectations and 60 seats short from the 2019 election results. Even more staggering is the loss of Modi's BJP party. So his BJP party won only 238 seats, falling well short of the simple majority, and that's compared to 303 seats in 2019. Now, the opposition alliance led by the Indian National Congress picked up a significant amount of seats, winning 234 seats in parliament, which is 143 seats gain relative to 2019. So a big outperformance by the opposition.
You know, there's been a lot of press that's come out about, the seats that were gained by the opposition Congress party. Can you walk us through maybe what you think were some of the major reasons for their outperformance in this election cycle?
I think it's mostly economic related. Now, India has experienced very strong growth over Modi's term, but the Indian National Congress and its allied partners really campaigned on more populist policies. So there's been a lot of dissatisfaction with the lack of job opportunities in India. So they campaigned on guaranteeing jobs for the electorate as well as on social handouts. So given the high inflation, given the lack of job opportunities, I think the Indian National Congress and its allies were able to pick up a lot of seats because of that.
So one of the underpinnings of the investment thesis for India has been Modi's strong reform agenda. And I think what we saw at the beginning of the week was a lot of excitement that Modi and his BJP party might have a mandate. And now they obviously have less seats than they were expected to pick up. What, if anything, does that do to the outlook for the reform agenda that Modi has in India?
Yeah, it's a good question. So again, like we mentioned, this is the first time that Modi's BJP party is going to have to work with its allies to actually form a government. And that gives a lot of bargaining power to its allies. And that means, unfortunately, that some of the really big bang reforms that everyone was hoping for Modi's third term are going to be a little bit more difficult to achieve. Now, in Modi's second term, he's done a lot on the infrastructure side, improving the manufacturing base within India, eliminating a lot of the red tape, which has been positive for private investment, signing free trade agreements, and rationalizing the subsidies through more targeted measures through digitalization. We think a lot of those reform measures are going to continue into Modi's third term, but the more controversial reforms related to land reform and labor reform, which could really propel India into the next stage of growth, those are going to be much more difficult to achieve. But all in all, it's still a very business-friendly environment in India, and we expect the reform momentum to continue, but just at a slower pace. And then on the fiscal side, We think that there is going to be a continuation of fiscal consolidation from the pandemic fiscal wides, but that fiscal consolidation may happen with a little bit more of a populist tilt.
And when we look at India from a market standpoint, we've seen very strong nominal growth supporting, the outlook for risk assets across India. And the majority of the volatility at the beginning of the week was in the equity market. The FX and the local interest rate markets remained relatively stable. What is our outlook for India when we look at assets overall?
Yeah, despite the big disappointment of Modi's party's performance for this last election, the favorable structure outlook in India has not changed at all. The demographic dividend is going to propel India into high, single-digit growth. Of the 1.4 billion population in India, over 50% is under the age of 30. In addition, India is one of the countries that's going to be benefiting from the realignment of global supply chains. That and the economic fundamentals look relatively robust. Again, very high growth, low inflation, strong balance of payments. We have a central bank that continues to conduct counter-cyclical monetary policy, building up FX reserves, and continuation of its FX intervention program, dampening any sort of excess volatility in its currency. In particular, for local assets, that means that the INR has a high carry, low vol ratio, which we continue to like, and there's really favorable supply-demand dynamics for Indian local government bonds. On the foreign investment side, that's still relatively low. And in addition, India will be entering JP Morgan's suite of indices, and that should propel foreign investor flows to the tune of, some analysts, over $20 billion over the next couple months.
Great, thank you. So despite the relative underperformance of Modi's BJP party in this election, we still maintain our positive view on the structural outlook for India and Indian assets in general. All right, maybe let's pivot now to another country that just went through an election where, again, polling didn't quite pick up, what the final result was. Nick, let's move to South Africa and, discuss what is a historic event. The African National Congress has been the party in control of South Africa since 1994, since apartheid. They've enjoyed single-party control. And this is now the first time since apartheid that they have lost their single-party control. Before we get to the actual results of this election, can you maybe take a step back and walk us through how we actually got to this place?
Yeah, Bill, it's a good question. Over the last decade, we have seen that support for the ANC has been steadily eroding. A lot of different reasons for this. I would point to two. One is voter dissatisfaction with the amount of corruption that we've seen at all levels of government, really stemming from corruption in the ANC. But I would also say that there's been voter dissatisfaction with the fact that the ANC has just failed to improve living standards for South Africans. Over the past decade under ANC rule, the economy has been growing at an anemic pace. It has not been able to produce the number of jobs necessary for the growing population there. So we've seen unemployment stuck at very high levels, above 30%. We've also seen very little progress made on longstanding issues, such as inequality and poverty. We've also seen a really severe degradation of the infrastructure across South Africa, largely due to the corruption issues I mentioned, as well as mismanagement in state-owned enterprises, literally led to a severe degradation in not just the delivery of government services, but also in the physical ports, roads, bridges, and rail infrastructure in the country, and probably most notoriously the electricity sector, where we've seen for many years now widespread electricity and power outages, which have really cramped growth in South Africa.
And obviously the election result for the ANC has led to, now the ANC only maintaining about 40% of, the overall vote in the final tally. Can you walk us through a little bit more of the detail of the election outcome and potential, what the new government's potential makeups may look like?
Yeah, so as you mentioned, the ANC came in at 40%, well below the 50% needed in the National Assembly to be able to elect a president, form a government, and pass legislation. So they will have to turn to rival parties in order to govern here. The ANC has several options at this point. I would say the most market-friendly outcome would be an ANC agreement with the main opposition party, the Democratic Alliance. The DA came in second place in this most recent election with about 22% of the vote. This is a party that you can describe as very pro-business, very centrist party. So in this scenario, we would expect that both the ANC and the DA would come together on a lot of common policies, including pro-business reforms, privatization efforts, and we could see an acceleration of some of those pro-business reforms that have been recently pushed by the ANC. That is one option. However, the ANC also has other options. It could actually turn to the next two biggest parties in the National Assembly. Those would be the MK Party, which came in at about 15% of the vote, and we also have the Economic Freedom Fighters, which came in at 10%. The problem with these two parties is that they can both be described as quite left-wing populist parties, which would certainly influence policy in that direction under a potential coalition agreement with either of them. These are parties that have embraced pretty radical policy platforms, including the nationalization of key industries, including mines and banks. Also big proponents of policies such as land expropriation without compensation. So under these scenarios, we would expect a much more adverse market reaction.
So I know there's a lot of ink being spilled on the potential downsides that could come out of the coalitions that could be formed. But when we look at South Africa, one thing that the country has benefited from is a very credible central bank. It's really underpinned the economic growth or the economic outlook and the investment outlook for the country. If we were to look at the more positive outcome of a DA alliance with the ANC, are there additional structural benefits that could come and maybe address some of the structural issues that you pointed out at the beginning of our discussion?
Yeah, absolutely. In theory, we could see a lot of common cause between the DA and the ANC on these pro-investment and pro-growth reforms that we have seen being pushed recently by the ANC leadership, namely from the president, Cyril Ramaphosa. Slowly, they have been introducing and pushing privatization efforts, efforts to tackle corruption and improve state-owned enterprises. So we could see that the coming together of those two parties leads to an acceleration on those points specifically. In addition to that, the DA would also serve as a check on the ANC in terms of issues of corruption, but also probably help to contain some of the fiscal pressures which have been longstanding in South Africa and kind of a key weakness when it comes to South Africa fundamentals. We also, with the DA, would see a lot of respect and defense of the independence of the central bank, which would, further support South Africa's very strong institutions and would also be favorable for the markets. I would also point out, however, that even under a market-friendly scenario, I think we have to have a bit of caution around this outcome, because even though we've seen coalitions being formed at the local level in South Africa, those coalitions have tended to be very fragile, a lot less stable, and have led to a lot of policy gridlock. It's still an open question about whether or not a coalition and coalition politics at the national level would be productive or would fall into this less favorable dynamic.
Okay, so a lot to watch there, but there is a path that could come out that would actually be more favorable for South African assets in general. And when we're thinking about just timing, can you just wrap up with when do we expect the government to be formed, or at least to be brought forward in the first attempt?
So we got final election results were announced on Sunday, June 3rd. That started the clock on 2 weeks within which the new incoming National Assembly must convene and sit to elect a new president. So coalition negotiations are underway right now, being led by the ANC. They have reportedly been reaching out to many parties across the board. So we'll have to continue to watch that. But we would expect, by the weekend of June 14th, to have some idea of what a potential coalition government might look like.
All right, we'll be watching that closely. Now, moving back a little closer to the United States, another country that introduced a lot of market volatility, this time in the currency markets over the course of this week, was Mexico. We also saw polling that wasn't quite reflective of what the final outcome was. We saw outperformance on the presidential election by Claudia Sheinbaum, but really, I think the story for Mexico lies in what happened in the new composition of the Congress. So, Val, can you walk us through the outcome of the Mexican elections?
So polls accurately predicted that Claudia Sheinbaum of the ruling Morena party would win the presidential election, but they didn't predict the wide margin of her victory. She won with a near 30 points over her the next leading candidate. And as you alluded to, the big story for Mexico was the composition of Congress, where market expectations were that the ruling Morena party would continue to maintain a simple majority in the lower house and Senate. What actually manifested was that in the lower house, the Morena party got a qualified majority and a near qualified majority in the Senate. So there are big risks looming in the market of what the Sheinbaum administration will do with this qualified majority and if they'll pursue constitutional reforms that could be more radical than otherwise if there was only a simple majority in Congress.
So the market seemed very concerned about, the outcome of, the congressional makeup for this new government. As you pointed out, President López Obrador did not have as strong a majority as Claudia Sheinbaum is going to have. So can we dive a little bit more into, what those risks are, and is the market justified in its concerns?
Yeah, I think there should be a justified risk premium because there is a new degree of uncertainty on the institutional strengths within Mexico. So not having a qualified majority was an effective checks and balance on AMLO pursuing a more radical reform agenda. And by all indications on the campaign trail, it seems like Claudia Sheinbaum is going to continue on the same reform path. One of the big risks that we see is actually going to be coming in September. This is when the new Congress will actually take office, but President AMLO will still have 1 month left in his term. So this 1 month overlap will allow President AMLO to use the qualified majority to pursue constitutional reforms that he thinks can really cement his legacy. Now, we know that back in February, President AMLO submitted a 20-point constitutional reform bill to Congress that didn't pass because he didn't have those constitutional majorities. But it's possible during the month of September that we can see AMLO use that time frame to try to pass some of those items. What he would try to pass is still relatively unknown. It is a short window, but we do think that it's possible he could use that time frame to pass certain reforms that would help perpetuate the powerhouse of the Morena party. That could include things like judicial reform, which would be a popular election of Supreme Court judges, moving it from a technical body to a more political body. Also, electoral reform is possible, and there's also pension reform, which would have big implications on the fiscal side as well.
With the new administration coming in, do we expect major changes in our outlook for the Mexican economy?
There's two things that we're going to be watching on the economic side. One is the fiscal side and one is the growth side. On the fiscal side, regardless if Morena received the qualified majority or a simple majority, there is fiscal risk looming. Now, AMLO is a populist, but under the first 5 years of his term, he pursued really fiscally austere policies. However, when you look at the composition of spending, there was a pretty big deterioration in terms of flexibility in that he was transferring a lot of the spending to more socially driven policies that were less growth-oriented. Now, Sheinbaum is going to inherit a pretty wide fiscal deficit from AMLO's last term in office. This is in part because of pre-election spending, but also because AMLO is continuing to spend on his policy priorities to finish big infrastructure projects that are part of this legacy. So in the next year, we do expect a big consolidation of the budget, but how much he can consolidate and if Claudia Sheinbaum will pursue a tax reform is a big question for the market. So we could see a continued slower pace of a consolidation than the market would like to see. On the growth side, given some of the institutional risks, we see that as an inhibitor to medium-term growth for Mexico. and a potential to slow private investment, which Mexico needs in order to continue its nearshoring story. And then lastly, in terms of risk, perhaps the biggest risk is not in Mexico, but related to the U.S. election cycle. If there is a change in administrations, we could see new rhetoric kick up in terms of tariffs and having U.S. and Mexico trade relations, as well as what's going to be renegotiated in the USMCA, the free trade agreement between U.S., Mexico, and Canada, and if there's going to be new discussions surrounding rules of origin.
So the one institution in Mexico that really has maintained credibility and actually underpinned a lot of the investment thesis for the past couple of years, especially in the currency and domestic rates, has been the Bank of Mexico. Does that view change, or is there a change to the investment view that we are taking towards Mexico following this election?
There's not a large shift in our investment view. Now, because there aren't those checks and balances, we do think that the market may play a key role in replacing those checks and balances that Congress once had played. We all know that the central bank doesn't like excessive volatility in its currency, so we do think that the Bank of Mexico will remain relatively hawkish to help support the currency. We also think that the structural story of nearshoring is going to continue to benefit Mexico in the long term, and given the outlook for the central bank, high real rates and high rate differentials with the U.S., we think will also continue to support the local rate story. But again, there are big risks looming in September, and we do need to watch the U.S. elections, which could induce a new bout of volatility into Mexican local assets.
Great. Thank you, Val. I hope that these views provide a little bit more insight to what we're thinking at DoubleLine about the outlook in these particular countries, Mexico, South Africa, and India, over the course of the next couple of quarters. In general, we think that the structural forces that have underlied a lot of the investment thesis for maintaining our investments in those countries still remain, despite the outcome of current elections. As Val pointed out, the biggest risk that we continue to see this year on the global election landscape comes from the United States, where a change of administration in the United States would lead to more aggressive policies internationally, especially as it pertains to Europe. And in both party cases, as it pertains to China, we continue to see an aggressive stance. And as Val went through, potential issues around the USMCA would add volatility to international markets. So we'll keep an eye very closely on the outcome of the U.S. election. Again, thank you for joining us. If you have any questions or would like to find out more either about the content today or anything else, please reach out to info@doubleline.com or your DoubleLine representative.